Hello traders, Cousin Vinny coming to you from theclosingprint.com, January 16th, 2023. In this edition of your weekend video newsletter, we'll discuss the indices, all of which closed higher last week on above average volume. We have 14 bullish indicators to start Tuesday trading. 4 are neutral and 2 are bearish. Bearish indicators are mostly breadth extended to extremes. Yet many stocks are still set up for potential follow-through this week. We have S&P 500 support at 3,800, put wall support at 3,900, and the 4,000 resistance call wall, which we ran into on Friday at the close. Both the volatility trigger and zero gamma moved higher last week, setting us up for a range-bound condition on Tuesday. Starting off with the New York Stock Exchange, we did have an abundance of new highs versus new lows. As we can see, we're above the zero line. The black line is above the zero line and rising. We also, in order to see a rally, need to have NYAD advanced decline well above its 200-day moving average, the blue line, as the New York Stock Exchange stays above the 200-day since the latter part of November. So as we start off Tuesday trading, that'll be the 8th week that New York Stock Exchange is above the 200-day and extending with green elder sticks all of last week. The Dow Industrials are also above its 200-day moving average since the last week of October. It did bounce in the middle of December as we look for a move above 34,700. The Copac cycle is also bullish and starting to push through the zero line, rising rapidly on above average volume. Adding to the bullish bias that we see in the New York Stock Exchange, we also have a broader measure of market participation in the Wilshire 5000, closing above its 200-day moving average on Friday. We're looking for the 9, 21, and 50-day to all move higher. Volume was exceptional for the last 7 trading days, and the cycle is also bullish. Rate of change is starting to pick up with a crossover last week on Tuesday, giving us a bullish reading for this week. An interesting side note with respect to the mortgage rates, which have been moving lower with yields, it's time to watch the housing market, including both existing homes and home builder data over the next couple of weeks. That's because a good enough CPI plus the precipitous drop in bond yields has reshaped the entire forward-looking interest rate structure. That means that any potential buyer who has been waiting for interest rates to drop might decide that their opportunity has finally arrived. And if we're right, the rush to close will be fairly aggressive as buyers will put plans to work in fear of a rate hike, which could certainly materialize at some point. Bottom line, as long as yields are dropping, with the 10-year yield at 3.49%, if that drops a bit more, that's breaking a moving average and a support line that would certainly signal yields could move lower. So you want to keep an eye on the home builders, which have been on a rally as of late. This is something that John Murphy over at Stock Charts pointed out this weekend, with Redfin, the online realtor, recently trading at penny stock levels below $5 per share. You can see that when the CPI data came out, this started to rally. This might be something to look at as well as the home builders, which have been trending since November when it pushed above the 200-day moving average. You can see DR Horton here. This has been trending along the 9, 21, and 50-day above the 200-day over the last 12 weeks. Together with falling yields, if the VIX continues to move lower and stays down there for an extended period of time, that would mean that put buyers have mostly gone away, leaving the market makers no choice but to buy calls and index futures in order to hedge their bets. So the longer we stay down here below 20, the better for equities going forward. While we are bullish, the markets still have a lot of work to do, and something that we'll be covering during the live sessions this week. Small caps had their share of buying last week as well, pushing above the 200-day moving average on Wednesday. Volume was looking pretty good. Looks like institutions buying here. MACD's above its signal line, and stochastics moved from below 20 to over 80 and is a bit extended at the present time. Look for prices above this level here to continue. Test the 188 level and then 200 in the short term. RSI is above 50. So it looks like IWM can continue this week, just judging by momentum. A review of the S&P Equal Weight Index, removing the weight of the top 15 stocks on the left that make up over 32.25% of the S&P 500 weight, gives you an index which is broken out above its 200-day moving average as well. The 9, 21, and 50-day have crossed in a bullish direction. The number of stocks trading above their 50-day is a bit extended, so that could pull in a little bit. And we have the number of stocks above their 200-day at 66%. With this in mind, I would think that there's a possibility we could flag first and follow through, if not pull back altogether, if VIX starts to spike. But all else equal, we are having a bullish breakout and looking forward to more upside in the short term. With most indices bullish, we do have the NASDAQ 100 below its 200-day moving average, the green line, so we need to see that continue. The cycle is certainly bullish and pointing higher. We just pushed through the zero line on this Copac indicator with potential for a follow-through and a test of the 200-day in the short term. At the same time, breadth has reached extremes on the NASDAQ 100 in the lower panel. We haven't gotten to plus 30% yet. We did see that on the small caps, mid caps, and almost saw it on the S&P 500 in the top panel. But the small caps and mid caps have reached that level, which is telling us that we should see a little bit of profit taking and perhaps a few days of weakness. With the NASDAQ McClellan oscillator in a bullish follow-through, looking for this higher low to lead to a higher high. We can see that in the background, the gray area, that the NAMO is a bit extended at present, so we'd expect to see that pull back in a little bit as the NASDAQ 100 comes up and tests that 200-day. And that said, the New York Stock Exchange McClellan oscillator is extended as well. It hit plus 100 on Thursday, came back in a little bit on Friday at 96.41. It is in a bullish cycle, so we're looking for a follow-through. However, we are extended and wouldn't be surprised to see a little bit of consolidation or profit-taking to start the week. With yields moving lower and the dollar also fading, the latter having an impact on international markets, most of them are rising. And we're also seeing a rise in commodities at present with gold and silver pushing a bit higher. Copper also very bullish with gold on a bullish run and silver showing a potential squeeze. Last week we told you we took some GDX. We're looking for that to follow through this week as well. Rather than playing gold directly, I'm playing the miners with the trend clearly bullish above the 9, 21, and 50-day moving averages. And with the dollar moving lower, most of the commodities started to bounce, with Brent crude holding that 80 level on the weekly. And on this daily chart, you can see this higher low. Looks like we're going to get above the 50-day and test the 200-day in the short term. While the commodities CRB index is showing signs of a hammer for the last 2 months. And on the daily, showing this level down here that we reached in September, getting tested again to start the year. So if this starts moving higher, that would put a little bit of pressure on stocks. So we want to see this just chop around in a range. That would be the best case scenario while the dollar continues to fade. The sector heat map is beginning to change from crimson to lime greens and chartreuse. We're starting to see some positive aspects to that sector rotation. We also have international markets moving higher with the US dollar fading. That's good for international markets. We've been looking at emerging markets as a trade over the last few weeks. Also paying attention to Argentina, which had a big move over the last couple of weeks, along with bullish developments in Asia and Europe. Starting off this week, we have the IBD 50 setups that look good, that aren't overbought yet, that have potential stochastics pointing higher, in addition to stocks from a relative strength scan that look good for the follow-through. Oil and gas names, some of the big cap industrials like Caterpillar also look like they might follow through. The Dow Composite also rallied last week with these 65 stocks, big cap names following through. Many people were saying that we need the leaders to lead. Well, they have in fact been leading. We've been above the 200 days since late October. The green line, 921 50-day have turned back up. Price action is testing the highs, looking for a move above 11,600 to 11,700 this week. Most stocks on the IBD 50 are trending, looking for volume to be more pronounced. Stocks like AGCO, while it does look good, RSI is rising. We're pushing the top of this cup pattern, W shape. Looking for stocks like this to follow through. But the thing I'd like to see is stochastics more oversold, like we have with Broadcom. Looking for Broadcom to follow through this week. It was hit last week to start. We pulled back on Tuesday to the 21-day moving average, but volume picked up. I'd like to see a little bit better volume, but stochastics above 50. Looks like it might push higher. Additional stocks on the IBD 50 that look a little better. We have a nice 3 white soldier pattern off the 200-day moving average for Box. Stochastics set up the way I'd like to see this week with MACD starting to turn. You can see histogram starting to pick up. Volume was above average on Wednesday. Thursday and Friday it drifted down a little bit. That said, we are looking for this kind of setup and look for price action to continue higher. Cadence Design, we're pushing off the 921 50-day. It's right above the 200-day moving average. However, we do have stochastics rising into the overbought level. MACD is above its signal line. RSI shows that there could be more upside. The strength of the trend is improving. So watch for Cadence Design and other semiconductors related names to follow through this week. Sports drink manufacturer Celsius Holdings, nice little move off the 50-day. Pretty clean looking chart, looking for a retest of that 122. 52-week highs. MACD is crossed on Friday. And we have stochastics pushing higher. Not quite above 80. Could see a couple more days upside in Celsius to start Tuesday trading. ConocoPhillips, very similar pattern, looking for a push higher. RSI is rising, showing strength of trend is improving. We're above the 50-day moving average. Watch for the 921 to pass through the 50-day this week. MACD and stochastics turn up. You can see stochastics a bit overbought, but volume is looking pretty nice. Looking like institutions are starting to accumulate shares again as it pushes back above the 50-day and stays above its bullish 200-day moving average. Catalyst Pharmaceuticals, CPRX, this is one that Frano's been trading. It's above the 921 50-day. You can see all moving averages are up and to the right. That's a bullish trend. 921 50 and 200-day are stacked. RSI is above 70 now. So we're looking for volume to continue to pick up. MACD and stochastics a little bit extended, so we could see some consolidation up here. Looking for pharmaceutical stocks to catch a bid, as well as healthcare, which has been off a little bit. The other sectors performing a bit better. Healthcare needs to push along with pharmaceuticals, medical device makers, healthcare providers like UNH that had earnings last week. Looking for that to push higher. They sold that at the 510 level, unfortunately. Looked like United Health would follow through. John Deere looking pretty good. Look at RSI showing strength of trend. We're looking for a break above this 440, 450 level. And volume to continue building. MACD's above its signal line. Stochastics a bit extended. If you were paying attention to Caterpillar over the last few weeks, we had a nice trade on this breakout of this consolidation. W-shaped pattern, an extended handle that lasted about 6 weeks, and then price action just started rising after earnings. We also saw volume picking up and MACD above its signal line. This is a bit extended right now, watching these industrial names like John Deere and Caterpillar for some consolidation, but very bullish nonetheless. As we were just saying about medical devices, we're looking for Inspire Medical Systems to follow through. We had a nice breakout on Friday. Volume about average and stochastics turning. This is the kind of setup I'd like to see, with MACD turning and RSI pointing higher. Look for a breakout of INSP on Tuesday or Wednesday. Pinduoduo back on the IBD 50. This Chinese stock continuing to push after a little consolidation into Thursday, Friday. Looking for a break higher. MACD's above its signal line and stochastics is rising. If Chinese stocks are strong this week, look for Baba, Baidu, Bilibili, Pinduoduo, JD.com, and others to follow through. Baba looks pretty good here. Look at the volume over the last 2 weeks. Looks really strong. The problem is that stochastics is embedded. We've seen it do this before. And of course, price action was consolidating during that period. RSI is showing muscle, so the strength of the trend is persistent. It's not fading at this point. So that's a good sign if you're thinking about trading Baba or some of these Chinese names this week. Solar Edge Technologies is also looking very strong. We saw a lot of the solar names moving higher. First Solar had a nice follow through. I believe Frano was in that one as well. Prism was looking at in phase for the bounce. Got a nice bounce back to the 200-day. Volume picked up. Very strong volume. MACD's turning and stochastics is set up nicely on in phase. I have in phase panels on my house. I'm really happy with them and all of the microinverters, etc. So with customers going to solar and alternative energy in the future, look for in phase to continue higher in the weeks and months to come. Nice little bounce here at the 230, 240 level. Look for it to move back up into the top of the range, along with Solar Edge, which is back on the IBD 50. Also back above the 10 EMA on the weekly. Daily looks very strong. Shoals Technology, SHLS, RSI rising. Price had a nice follow through from Tuesday on, trying to get back above 32. Relatively inexpensive name. Look at the volume. That's institutions picking up shares. MACD has crossed and stochastics is rising. Look for SHLS to follow through this week, along with the previously mentioned IBD 50. Once again, make sure you check out some of the names under this relative strength scan. All of these are set up looking for a follow through this week. Okay, traders, this is going to do it for me for this week. This is Cousin Vinny coming to you from theclosingprint.com, January 16th, 2023. I'll send out a watch list later tonight, sometime around midnight on the East Coast and around 9 o'clock on the West Coast. So be sure to check your inbox for that. Otherwise, enjoy the rest of your weekend. Take care, and we'll see you in the morning. Ciao.